Welcome back, everyone. It is an interesting week in markets, and we've got markets hanging on with dear life. If you take a look at the S&P 500 ETF, the SPY, the hard right edge presents another indecision candle with a low that is not actually taken out yesterday's lows and is still in the range of support. The market sell-off that started on Tuesday has taken a pause, to be quite clear. Is the pause the area where we're in the eye of the storm, or is this effectively the beginning of a potential pullback up? Now, the news flow is still by and large negative, but an incremental negative has not really emerged that has taken prices down. In order to really justify another down, one of the key things that I'm looking at is, of course, the US dollar. The higher the dollar goes, the higher the risk is for the market to decline. Now, the dollar was estimated yesterday to have potentially another 0.5% of a rise in front of it. And by and large, that has taken place in markets today. As we see the dollar rising into a resistive cluster, is this now the moment where it backs off and the market gets a bounce? Well, a tell could be in how folks that trade precious metals, in particular things like silver, are treating the metal. They are treating it as if the dollar has hit a resistive structure and less likely to come up any further. You can see that in the green bar on silver. Now, this paints a picture of a market that is trying to stabilize in a sell-off, but technicals are still negative. Let's go take a look at the technical picture using the Champion Trend Pack Toolkit developed by the only 33-time real money on-site domestic and international trading champion, and that would be Rob Hoffman. Now, these tools have been developed over decades. They come as part of the toolkit for ultimate members on Wealth Charts. This is the Champion Trend Pack Toolkit with a couple of the member exclusive tools also added in, like the MSR channel, for example. Now, you're looking at the Russell futures on the very left, the Dow, the S&P, and the NASDAQ. The Russell has been like a canary in a coal mine and has made a lower low today. It is still not in a sell signal state per se. We're losing that bullish momentum with the Champion Cross compressing, but the Champion Trend and Champion Cross still remain in a modest buy signal state. The Dow, which is a price-weighted index, is very much similar, remains in a buy signal state, but we're starting to lose that bullish momentum. When we look at the S&P and the NASDAQ, we can tell that the lower lows that happened yesterday were largely retested, not quite as low, but largely retested today without a breakdown. We're still losing bullish momentum, that is to be sure, on both ends. However, we have not moved into a sell signal state on a daily candlestick chart basis. Now, if we change our view to a 4-hour time frame on all of the individual indices, we see a little bit of a different picture, and a picture that may really be important to the next several days of trade. Now, we are moving into the end of the week, that is to be sure. And when I look at the Russell, we can clearly see it is in a sell signal state on that 4-hour chart. It got a breakout forecaster yesterday, not one today, but it remains below the Champion Cross sell zone, and it remains in a Champion Trend sell zone, well below the channel, in a sell signal state. The Dow, as of today, has moved into that sell signal state officially with 2 days under its belt, well, 2 candles under its belt, 2 4-hour bars in a Champion Trend and Champion Cross sell signal. The S&P 500 is in that sell signal state as well, Champion Trend and Champion Cross. Now, we know it's the heavyweight stocks that reside within the NASDAQ that really push and pull markets around. And if I take a look at the NASDAQ in detail, I'm going to make it full page here for you. I want you to really zoom in on the last 4-hour bar that we're in right now. That last 4-hour bar also presents itself in a Champion Trend sell signal state, Champion Cross sell signal with the dot on the bottom of the main chart, but we've now got a yellow ball above, a yellow dot above the current 4-hour bar. What does that mean? Well, once this bar officially closes, we would be in stage 2 of the Champion Trend Pack sequence of signals on the sell side. Stage 2 does imply a much closer spot to getting to stage 3, and of course selling to beget selling. Now, despite the run back up into the end of the day, or back from the back half of the day, we are still presented with that incremental sell signal that says, watch your back. Likely downside risk is still here. So how do we reconcile the two? Well, a bounce that fails would be one option. And when I mean reconcile the two, well, how do we reconcile the fact that the dollar is coming into resistance? Folks that trade silver are bidding it up, and the market has not really gotten into a unravel state. We know that past sell-offs, we have a breakdown. We've had a couple of days of indecision like we had right there, a breakdown, a couple of days of indecision, and then a follow through to the downside. Now, this being an interesting week with the jobs data coming in tomorrow, we know that these indecision candles, very similar to the pattern we just saw in the recent past, and that would be into the beginning of September. If the jobs data comes in and confirms that less people are working, and we're in a state where the Fed has acted and taken rates down in a larger size than many would have expected, this would spell out, if folks are not working as much and the hourly wages are coming down, that there is indeed going to be a consumption crisis. In this case, what do? Well, we deal with a market that has downside risk until we hear more from the Fed with respect to stimulus. And of course, we are moving into that earnings season now. In the next week or so, we're going to be kicking off earnings season in earnest. And of course, the banks are going to kick it off and give us an idea of whether or not this market has the potential to withstand a consumption crisis. At this stage, getting into the end of the week, orange ball on the 4-hour chart from the NASDAQ does indeed imply some downside risk is still in front of us, but we have to keep in mind that if the jobs data comes out tomorrow and it passes, we could see a temporary bounce before the next down sets in. Below $567 on the SPY, it is more likely that we end up with further downside risk. Above $569.50, it does open up a back test of the broken support floor, which is now considered resistance. And that would be all the way from 572, to 571 and a quarter. Folks, I hope that this video has helped give you some cause to think through the market machinations. We are indeed in interesting times where volatility is likely to beget more volatility. This market has to be treated with highly strategic, precise decision-making. And to that end, I'd like to invite you to the next and best election edition of the Wealth 365 Summit. It starts on October the 14th. Simply go to joinziad.com, get your seat now so you get all the goodies, get an idea of when, who's presenting. And of course, we've got this incredible lineup of speakers, including Rob Hoffman, myself, and many others like Dr. Keith. We are going to be, and Hubert Centers, we're going to be sharing great insights with you on how we're tackling the markets into and through the election for this big transition period that the market is in. Wishing you a wonderful rest of your day. Thanks for watching, and looking forward to sharing more insights with you in videos just like these. Bye for now.